Hello and welcome to Big Deal. I'm Nisha Poddar. Now, startup funding winter really continues, but in the month of September, we've seen at least 5 fundraisers which are over $100 million each. So, the big question is there any pickup in sight, and when can we see the green shoots in the tech and digital-based startups? Let's get you a view from the venture capital investors. First on the show today is joining me Arpit Agarwal of Blume Ventures. Arpit, always a pleasure to welcome you on CNBC TV18. Now, the funding winter, as we have seen it now, do you have a visibility on when is the revival expected to come? I'm asking you because your fund has $650 million of assets under management across 175 companies. So what's the ground view looking like?
Isha, thank you for having me on your show. It is good to be here. As far as funding winter is concerned, I know that the late stage deals are still very slow. We are experiencing that many of our companies trying to raise money are taking more time to raise and are raising at lower valuations than they expected, even if a deal is happening. What is definitely happening in the market is that there is a very strong preference towards EBITDA and PAT positive companies. So the late stage deals which are actually happening in Indian market are largely close to EBITDA or close to PAT positive company, which is a good positive sign. There is a clear preference in the market at this point of time. Also, the investors coming in later stages are very careful about IPO ready or IPO worthy companies because the exit is also going to be a very important play here. As far as revival is concerned, I am suspecting that we may not have any revival in sight till maybe June of next year. That's the guidance we have given to our portfolio companies. That they should not expect any more funding infusion, internal, external, till then. If something happens, of course, we should take it, but not count on it. And therefore, cash conservation is the key theme at this point of time. On the other end, our business is largely early stage business, and that has been continuing with the usual pace. I would say slower than usual pace, but in terms of number of checks that we have written, we are currently tracking the same number that we used to, let's say, last year.
Right, cash conservation is key, and you also highlighted that you are expecting revival in probably June next year. Let's see how that goes. But how has Blume's investment strategy really changed in the present slowdown then?
So, Nisha, what is happening is companies are available at a better valuation these days at even later stages. So we are able to enter at a better value, and therefore we think that we probably have a better chance of success. However, each of those companies will hit the market, and we will see a challenge in raising more money for those companies, and hence our mark to market will be challenged or IRR will be challenged over a long period of time. However, what is happening is we are also looking at companies which have a much more solid business model. For example, companies which are tech first, companies which have a higher margin product, or companies which are not going to rely too much on CAC and consumer acquisitions on online media. That I think is a key focus at this point of time. Economics is a key focus at this point of time. Although in terms of sectors, we are investing in all sectors, just that this focus has become much stronger these days.
Right. You spoke about the eligibility criteria, some of the fundamental factors that you'll be looking for in a company to invest. But which are the sectors or the themes which are still looking attractive in the present scenario?
What I am particularly enthusiastic, although we did not have a role to play, is the listing of Idea Forge on public market. This company is close to me. I was in campus, IIT Bombay, long time back when they were just starting up. And I have tracked their success over the period of time. It has been about 15 years for them to come this far. There are two important trends here. One, deep tech, which is saying, deeper technology, world-class deep tech technologies is coming to the market and getting into hands of businesses and consumers, in this case, government. And second, defense sector, or broadly defense and aerospace sector, is getting a lot of love and attention from the public market. To me, these are very interesting trends and, sort of green shoots in the long-term direction. We will see a lot more investment happening in deep tech and aerospace and defense sectors in the time to come. We already know of few early stage deals which have happened more recently, and they were little bit hotly contested. So I think it's a good positive sign. These sectors are very interesting. These themes are very important for India to grow. The other thing which is happening is a lot more money is flowing into broadly what is called as clean tech or climate tech sectors. Wherever we are involving electric vehicles or green hydrogen or any technology which is able to reduce carbon emissions is getting a lot more love and attention from the global market.
All right, so the sectors of choice and still attracting attention, you mentioned green tech and even aerospace and defense, especially after India's moon mission. Space tech is being talked about. So what are the exit options for the investors currently? And do you also think that M&A solutions are being worked out?
There are going to be three different kind of companies, Nisha, as you can imagine. One are companies which have a fundamentally flawed business model. They will have no takers. Some of those companies will get consolidated, but not at great price. The companies which are doing quite well, they have stable business models and good positive economics, will start pivoting towards more positive economics such that IPO becomes possible. And those companies which are already doing quite well will continue to be listed. Over the last 2 years, we have seen 20 internet companies listed. That trend will continue to happen. What is going to happen? What has not happened in India, however, is from the venture capital, deep tech, early stage investing perspective, we haven't seen too many good quality M&A happening in India. That market exists, but it is not as rich as it should be. I think over the next 4 or 5 years, with more of these companies going towards IPO and investors valuing technology and innovation a lot more, we will see a lot more of that M&A happening. There are no real solutions to the M&A problem, to be very honest. M&A can only happen when a lot of strategic things align with each other, and that the market is available for companies to be listed or to be valued, such that a buyer also sees value in them. Hasn't happened so far in spades, probably going to happen over the 4 or 5 year period.
Right. So, Arpit, of course, having an equity market for exit optionality is very, very critical. So do you think that foreign direct listing, and that is something that has been an ask from the startup world, and the government is now coming up with very positive commentary on that, on working towards a foreign direct listing of Indian companies. Is that the need of the hour?
This has been a demand from the industry, venture capital industry, for a long time, that some of our companies should be allowed to raise money in the public markets abroad. There were technical challenges because of which it was not happening. We are very happy to see that some positive moves have happened. However, a lot remains to be discovered before listings really start to happen. But we are positive that more and more details will come in the due course of time. Also, that government is walking the talk about this particular piece.
Of course, government is walking the talk, but one area where the industry wants tax concessions is the reverse flipping area. What's your view and what's Blume Ventures' view on reverse flipping? And do you think that the tax concerns can be sorted?
We welcome all kind of companies coming back to India for a variety of reasons. If there are good reasons, commercial reasons, for example, they find listing possible in India, or they have better regulation happening in India and they read this reverse flipping for the regulatory reasons. Whatever their reasons may be, we welcome capital coming back to India and Indian retail customers, retail investors getting a lot more benefit of it. So it is a good positive sign. However, we cannot pass a blanket regulation or blanket rule saying, all the companies should come back or should not, get incorporated abroad. I think that is not the right thing to do. However, these are, again, green shoots and very positive signs that what is going to happen in India in future.
Right. And before we let you go, Arpit, what's the outlook for the short term in the themes picking up in the startup funding space? What is the action that you're expecting in the near term?
How I look at the broader mood is that revival is likely to come in a sector-to-sector manner. For example, the SaaS sector, the software product companies, are already beaten down enough in the US public market, and hence investment activity has picked up in the later stages in the US market. I'm suspecting that SaaS sector will get off the bat much faster in India too, because there is an inherent value. The business models are superior. There are good margin profiles in it. As I mentioned earlier, climate tech will continue to be very interesting for another couple of years, and a lot more investment will happen. Whether we will see exits or not is a different matter, but investment will definitely happen. We will also see more and more activity, but I guess a lot more calculated or muted activity in consumer internet sectors. But things like some of the business models in education or fintech or insurtech and so on are probably much more solid and will require capital. So those will come in at some point of time. We may never see the frenzy of investment activity happening in the case of e-commerce per se, but various vertical e-commerce and niche e-commerce might attract more and more investment. But I think the activity is going to definitely come back. It is very hard to really pinpoint at what time duration, in what shape and size.
All right, Arpit, lots of takeaways and the themes that are still looking attractive: clean tech, space tech, as well as SaaS. Thanks so much for getting us all those details, and thanks so much for joining us on Big Deal. On that note, we'll slip into a short breather on Big Deal, and we'll continue this conversation on the other side with another venture capital. Stay tuned for that. JSW Ventures joins us next.